Well, hello everybody and welcome to Trending Thursdays. My name is Susan Hayes Culleton and it is my absolute pleasure to be here with you today. I am Managing Director of VectorVest Europe and also I'm the host of Fantastic Female Fridays. But of course, ordinarily, I am not the host of this show at all. It is your fantastic Glenn Tompkins. Now, he can't be with us today. However, he has sent a video, and before we talk any more about the week that has happened and about all of the themes we're going to discuss today, let's hand it over to Glenn.
Hey everybody, this is Glenn Tompkins. Unfortunately, I won't be with you this week for Trending Thursday, but we have a great host filling in for me. Susan Hayes Culleton will be here to conduct Trending Thursday. She's also the host of Fantastic Female Fridays. So I hope you show her all the support that you show me. Make sure you like, comment, and subscribe to the channel. I'll see you next week. Have a great day.
The guy is an absolute legend, I have to say. He really and truly is. And he wanted to make sure that he got that message across to you. And of course, he will be back to you again next week with lots more stories and so on. So to those of you who haven't met me before, as I mentioned, my name is Susan and I have been working with VectorVest. Would you believe this is my 10th year? I may have met some of you before, whether it's on Fantastic Female Fridays, or maybe it was the recent 2-day Tampa Summit, maybe it was the VectorVest Summit that was held before Christmas, or a variety of other times. If it's my first time to meet you, it really is a joy. Also, as well, in terms of my background, I'm a CFA charter holder. That means that I'm a chartered financial analyst and I am trained very highly in analysing stocks. And of course, what we're going to do today is discuss a range of themes and also naturally turn our attention to the VectorVest system to see what stocks fit in with those themes. Now, first thing I would love to do is I would love to hear where you are tuning in from. So great to see here. I have you up all over here on my screen. So maybe just to make sure that we're all okay, up and alive and kicking, you might just pop into the chat where you're tuning in from. So I can see Mike saying, OMG, where is Glenn? As I say, he'll be back to you right next week, Glenn. And it's great that we've just heard from him. Thank you very much indeed, Drew. Thank you for your lovely welcome. And I can also see Mike saying, welcome, Susan. Thank you for doing this. My pleasure. Fort Myers in Florida, Naples in Florida, New York, Sherman in Texas, Virginia Beach, Belgium. Oh, fantastic. Israel, Madiville, Los Angeles. Oh, sorry, Louisiana. Apologies. Vancouver, Cleveland, Ohio, Atlanta, Dublin in Ireland. Hello indeed. And I see another familiar name there. Winnipeg. Hello, Barbara, who's also in Dublin. Halifax. Long time no see, says Paul Van Dorsen. I see also from the Netherlands. Georgia, Ohio, Akron, and on and on and on and on and on. Tommy Doyle from formerly of Wexford and now in New York. Brilliant. So keep them coming in. Keep them coming in. We're only delighted to see where you're all tuning in from. Great. So, well, as regards the week that has just happened, and to be fair, the week that is happening right in front of your eyes, there obviously is one big story in mind, and that is what's going on with the retail investors versus the with the hedge fund. So what I wanted to do today is, first of all, just tell you exactly what's been going on, right? What's going on, why is it going on, and how can we determine where this might go. Okay, number one, here is the down low, right? Really simply. In essence, a lot of people got together on a platform called Reddit and Wall Street Bets. And what they wanted to do was, as retail investors, now a retail investor is you and me buying our shares and then selling them as we would when we are simply buying stocks for profit or for profit and dividends. When you put the retail investor, when you bring them all together, they pack a huge punch. But ordinarily, retail investors don't work together in concert to achieve something in particular until this week. And then what happened was a couple of people got together and then they said, you know what? You know those hedge funds that have got a big position that is short? We're going to go after them. Now, let me explain what that is. If I buy a stock, I'm going to buy a stock today, it's $100. I'm going to buy 100 shares of it. It costs me $10,000. My intention is when that stock rises, then I'm going to sell. I'm going to sell when it gets to $120. A short is the opposite way around. I'm going to borrow a stock that I don't own Then I'm going to sell it. I'm going to sell it in the market. And then I'm going to sell it at 120. I'm going to wait until it falls to 100. I'm going to buy it back and I'm going to pocket the 20 in the meantime. And that is what some hedge funds do, and do at enormous levels. So that's what these people, retail investors, got together and they said, you know what? We're going to find the biggest shorted stocks and we are going to go after these. So we're going to buy and 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 push up the prices. And then, of course, those who are short, well, then they're going to get into trouble. Because just imagine this, borrow a stock at $120. I sell it, the stock goes to 150. Stock goes to 160. Stock goes to 180. How high can a stock go? There is no limit. So what happens when you get nervous? Well, you have to close the position. And then what? Well, then if you close it at 180, and therefore you have to buy the stock back at 180, you've sold it at 120, and then of course you don't just lose the money that you sold it at, you also have to pay 60 extra. And that is where these hedge funds find themselves in today. So who are the stocks that they chased after? Well, I'm sure many of you know exactly who we're talking about. It could be a GameStop, of course, also AMC, and also Nokia. There's a wide variety. This is spilled into Europe as well. That became very, very clear. Now, to actually give you some numbers on this, right? I took a look around at the market today, and here is what I wanted to show you, is that number one, yesterday, more than 24 billion shares changed hands in the US. 24 billion. That is a big, big, big number. And there was also a record 57 million options contracts were traded, surpassing the 48 million record set at the onset of the pandemic. And by some margin. That is a very, very significant margin. If the previous record back in March was 48 million, like the next record is 57 million. So that will just show you the sheer extent of what happened yesterday. And it was also the 6th largest one-day VIX move since 1990. To those of you who may not be familiar with what VIX means, VIX is the volatility index. That will tell you that we had the rockiest day yesterday. It was a roller coaster. And this morning, by the way, particularly when we woke up here in Europe, what I was looking, everything was down. I had a fully red screen, red screen. And you know what happens? You know what happens why that happens? It's when there are positions put in overnight that are going to be closed. People are saying, right, just get me out here. Yesterday was a bad day in the markets for a lot of stocks. Just get me out of here. They put in their positions overnight. They're triggered in the morning, and then everything is down. Now, things recovered and things built again over time. And of course, now when I would look at my screen, and we will do a market overview, of course. Now, when I look personally at my portfolio, I'm looking at mostly green. So that it's been a really rocky day. So these are the statistics really to describe exactly what happened. Of course, there is another thing that's going on that hasn't got anything to do with what I've just been talking about, and that is there was news yesterday, and that is that economists had expected the US economy to advance by an annualized 4%, which happened. Okay, so that actually happened. But that was following a 33.4% rise in the third quarter. This is the strongest annual rate of growth in post-war history. This is in the US. I mean, for an economy to grow by a third in one quarter is quite phenomenal. But of course, we all know the backstory to that, namely the coronavirus, and also economic output advanced 1% compared to the previous quarter based on the measure used by other economies. So really, I mean, you know, yesterday was all about the Fed making their decision to keep a policy accommodative. Jobless claims did fall, but still at very elevated levels. And really, the economy didn't exactly surprise. So that also happened yesterday, in on top of the craziness that is going on. One last thing I'm going to talk about before we move in and we take a look at the market overview. And of course, please do keep your comments coming, keep your questions coming. I'm going to be here right throughout the show, right here until 1:30 p.m. today. And I would only love to hear from you, to hear your thoughts, your questions, your concerns, and so on like that. That is what I'm here to do. But I do want to answer one question, and that is that people have been asking, how can when I say one company, one hedge fund, short more than 100% of the free floating stock? Let me explain what I mean. One of the things that the hedge funds have been doing is that they have been shorting these stocks, not just shorting 100% of the stocks that are available, but more than 100% of the stocks that are available. Now, if I want to buy stocks, I can't And when I say I might mean a history, I might mean a hedge fund, I might mean an institutional investor, whoever I might be. I can only buy 100% of the stock out there. So how could I possibly short then 100% of the free floating stock? Specifically, free floating stock, that refers to the stock that is available to be bought or sold. Okay, so that's what I mean by free float. So how could you possibly short more than that? Well, I'll tell you. Let's say I'm a hedge fund and I borrow all of the stocks available, all of them, right? I'm going to borrow all of the stocks available. I'm going to borrow 100% of the free float. Highly unlikely I would do that. Let's say I take half of it. I'm going to borrow 50%. So I'm going to go to an institutional investor. I'm going to go to a broker. I'm going to borrow all that stock. Okay? Can I do that? Yes, I can. Then I sell it. Goes into the open market. Who buys it? Whoever wants to is the answer. Whoever wants to buy it. But the thing is now they own the stock, so I can borrow from them again. And I can keep going and I can keep going and I can keep going. I can keep going and I can literally go out and I can borrow all of the stock that's available, sell it in the open market and go back and buy it from the new buyers. Do it again, do it again, do it again. So it is entirely possible. There have been stories flying around Twitter today and flying around the newspapers. How can a hedge fund short more than 100% of the free floating stock? That's why. They can short a lot more than that if they want to. But as we now know, the story and the big headline of today is that this is a huge issue. Now, from my point of view, I'm going to sit and wait it out. We're going to go through the market timing indicators now, and I'm going to tell you where we sit on that. But it's really something that I think is a big story to hit the markets right now. But I've been hearing and watching people say, let's take it to the moon. That seems to be a phrase that's doing the rounds, is that if you were going to take a stock to the moon, then somebody better be on the moon better and who is able to sell it. So let's just bear in mind that is the case. You can only buy a stock and sell a stock as long as there is someone on the other side of that trade. So let's see how this plays out. And by the time Glenn is back with you this time next week, it will be really interesting to see where we are at. Okay, now let's head on in then. Let's head on into the program. Let's take a look at the market timing right now. Okay, so I'm just going to go over here. Here is my homepage. So I have cleared the homepage here. Cleared the homepage so that you can so that we can make it as clear as possible. And I'm just looking here at great. First of all, I want to say a huge thank you to Joey. Joey is our producer here at the show, Trending Thursdays. Joey has spent an inordinate amount of time with me online here over the last couple of days and in preparing for today. And also he is there to answer your questions. So I know Glenn always says to him to say hi, Joey. So on behalf of him, hi, Joey, because of course he is based in North Carolina and I'm here in Dublin, Ireland right now. Okay, so what is going on with the market today? Well, first of all, let me just take this out here for you and let me expand it here so that you can see. Okay, let me just expand that out there now for you. So I hope that is a little bit easier to see there. Right, so as of right now, and of course, as you know, these prices are live. The S&P 500, so this is the index that looks at the top 500 stocks in America by market capitalization. So the largest 500 stocks in America, currently up 1.95%. Believe you me, I was here. I have been welded to the markets this past week. It was looking a very, very different story by this time yesterday. Also, the Nasdaq 100, and of course the Nasdaq is more focused on the tech stocks. It's actually, and it's changing in front of our eyes, of course, but it is up 1.88%. In addition, we have the Dow Jones here, industrial average. Of course, they're the big stocks in the US, 1.8%. But the VectorVest composite is actually only up 1.14%. Now, for any of you who are new, and I can see here that there's people tuning in here from all over, both new people as well as lots of familiar names and faces. By the way, it's interesting here. Jay is asking, can we profit from this? Well, that is what tonight is going to be all about. Sorry, it's tonight in Ireland, this afternoon in the US, this morning if you're in California. What we are going to do is we're going to talk about 5 different key areas where I'm going to take you through really up and coming trends that I think will be more long lasting, where you can take a look at it. But certainly the volatility, that is something I'm going to talk to you about in my final theme. So stick with me, buckle up and stick with me. Now, to come back over here to the VectorVest composite. So the VectorVest composite is the way in which we look at all 8,400 stocks that are in the VectorVest system. And what I can see here is that this is only up 1.16%. Now, what this is telling me is that the bigger stocks, because of course, remember what I told you, the S&P 500 is the largest 500 stocks in the US. The Nasdaq is the largest 100, specifically focusing on tech. The Dow Jones are the largest companies. Is that it's telling us that the bigger companies are making the bigger moves today, as distinct from the smaller one. I see here Kev is saying, Glenn, how you've changed. Yeah. I think you'll notice that the main thing that's changed about Glenn right here is his accent. Yes, of course, it is Susan here from Dublin, Ireland. So you're all extremely welcome. Okay. Now, let's move on then from there. So now that we know that the indexes are all in the green and all in agreement, they're all in agreement. In other words, they're all moving up. Admittedly, though, it's clear to see the bigger stocks are making the bigger moves today. Let's go over here and let's see if we were going into the market today. And I have had a couple of options that have expired worthless a couple of weeks ago. So I am ready to go back into the market. So if today was the day, if I was going to go back in today, what is VectorVest telling me specifically from the point of view of going into the market right now? It is telling me that it's quite neutral. VectorVest does not advocate buying stocks at this time. And by the way, I can simply tell that from reading this. Again, let me just pop it out here. Let me just pop it out and just so you can see it here. Right, so I can tell that obviously from reading here. Even if I couldn't read it, look here, this is firmly in the yellow zone. So VectorVest is saying it does not advocate buying stocks at this time. There is a whole load of shakiness going on right now in the market that is just trying to find its way. That's exactly what's going on. But even apart from that, I'm going to close that. Here is an even bigger indication. Okay. And this is what has been happening. And here's where I'm just going to spend a couple of minutes here. And then we're going to get straight into our themes and our stories. This is the underpinning of how VectorVest can make it a decision like VectorVest does not advocate buying stocks at this time. Look what was going on up until before this week. A lot of green, right? And this system is based really simply on green, yellow, and red. Okay, so if you see red lights, that is stop. Really, you need to be out. You need to be very, very careful, either not to go in, or else you may be looking at a short position if you're so inclined, or taking positions out, etc. That's looking at it from a very short-term point of view. Then, in addition, we have green, which is the opposite. Of course, green is, market is in a good place. It's quite welcome right now if you want to go in and take a long position and so on. But yellow is actually more difficult to interpret. So when you see yellow, you see one of two things. Either the trend is weakening or it's reversing. It's weakening or it's reversing. And you often don't know which one until it's finished. Now, at the moment, I can see a lot of yellow here. And the yellow means that the price is in disagreement day over day and week over week. It means that while the price might be up since last week, it's down since yesterday. So that is that's what it refers to. So day over day and week over week is in disagreement. So the market might be up in comparison to last week, but it's down in comparison to yesterday. And that's when we kind of say, okay, we've got a yellow light here. So is the trend, the uptrend that was previously there, is it weakening or is it reversing? Right now, I can tell you what I think, but right now the market is still trying to make up its own mind. Now, in addition over here, I can see what the MTI over here, the MTI is the market timing indicator. If you were here last week, and loads of you can be, of course, you can be here every single week, and all of the Trending Thursdays are all on YouTube, like this one will be. So you can go back and check. But Glenn was talking about the fact that the MTI was feeling, as he put himself, toppy. And now, by the way, I have to say, I'm a great fan of Glenn's. And one of the things that I love what he does is when he has one of his Glennisms, when he says, holy smokes. Now, he didn't do that. He just said it was a bit toppy. So he wasn't overly excited about this. And I can see why, is that the market certainly looked toppy, as he says. It was looking like it was heading, hitting up against, it was certainly hitting up against some resistance, all right. But it certainly didn't look like it was getting ready for a dramatic fall. And that is exactly what has transpired, is that we can see that the MTI over here has gone from 1.7, 1.69, 1.67, and now it's at 1.6. And look here, look at the MTI today. Just look at it here. The market has been open now for quite some time. And look at it. It hasn't really changed. It's not really budging at 1.6. So when I'm looking at my portfolio, I'm seeing big changes of certain stocks. I'm seeing really big changes, but you know, the stocks that we mentioned earlier, and the ones where they're being particularly sought out by people from Reddit and Wall Street Bets. But really, the market right now is just saying, we're holding our own, and it's not telling us which way that it's deciding to go. So that is why when you look over here, quite simply, the color guard is neutral. So is today the day that I will be going into the market? Will I be going in right after this? The answer is no. I will not be going with my liquid balance that I have right now, as I told you, as a result of my options expiring. I do have a liquid balance there that I'm ready to go again. Now, I'm going to talk to you about what I'm looking at. I'm going to talk to you about my shopping list. But right now, the market hasn't decided which way it's going to go yet. And as a result of that, because the color guard is neutral, I am staying where I am and waiting to see. And I was watching very closely this morning, really closely in Europe, if we were going to get red lights, and to see then if it would follow through here to the US. Okay, now at this stage, I'm just going to pop over here just going to check in here with Joy. Of course, he can't sit right beside me because he'd have to travel very far. And of course, we know that we can't do that right now. So instead, what I'm going to do is I am going to pull up my Teams here, and I'm just going to check in with Joy to see if there is any particular questions or any comments that he wants me to address. Also, can I tell you? Okay, great stuff. Thank you. Can I also mention to you as well is that yesterday VectorVest did post a video on all that's going on with GameStop and with AMC and with everything else. Clayton put together that video. So Joey, can I just check in with you? Would you mind, please, just popping that link into the chat so that then if you could, then anybody who wants to go and check that out, they can. All right. Now, I have got the amazing luxury of being able to talk to you about, thanks Joy, I see that that's gone in there now, 5 of my really big interests, first of all, and how that translates into the stock market, which I am just delighted that I get a chance to do that today. So let me start off here with the first one, right? And that is ESG. ESG is probably one of the biggest trends that is going to determine the way in which the future of finance is going to operate. And many people will say to me, ESG, what does that stand for? ESG is environmental, social, and governance, right? Basically, how people choose to invest, then that it's going to align with their values. Now, my first story is this one. It's a piece from the New York Times. The Blackrock chief pushes a big new climate goal for the corporate world. So this came out on the New York Times. This was out, a piece that was out on Tuesday. And I thought it was particularly interesting. I'm going to summarize it for you first. Then I'm going to get down to the middle paragraph that I really want to point out to you. And then what I'm going to do is I'm going to pick out 3 ETFs for you specifically related to ESG, and I'm going to analyze them for you. Okay, so let's start at the top. So ESG, as I say, environmental, governance, and social. How can an ETF find stocks that are particularly kind to the environment, good to their people, run well, and make a positive difference to the world and their staff, whilst simultaneously making a profit? You might also have heard of the triple bottom line. Triple bottom line is where you take care of your people, your planet, and your profit. Now, what I'm going to talk about here is different to SRI. SRI is socially responsible investing. That's different. So ESG is basically looking at the data behind this, where socially responsible investing is when you actually actively, like we're kind of seeing a little bit right now, depending on your perspective, socially responsible investing means making a difference with your money on a cause that matters to you, whereas ESG is looking at environmental, social, and governance data. Now, Larry Fink is the chief of Blackrock and has influence over $9 trillion, that is with a T, $9 trillion of assets. Now, let me just tell you what this piece is about. I'm just going to give you the summary. A year ago this week, he wrote to the CEOs of the world and said that we are now at a stage where we are going to be turning the tide on how money is going to be invested. It's not just about profit. Now it's about making sure that the money of the world is also being invested in line with environmental values and so on. A lot of people said that is nonsense. Yes, it's lovely to do that. Of course, what a lovely idea. And yes, it should be applauded. But when the choice comes between cost reduction, when times get tough, in comparison to a sustainability program will never last. And that is what was reviewed this week in this particular story. So let me pop on over here now and let me scroll down to precisely the paragraph I want to show you. And that is this, okay? So just to pick up where I've left off, if corporate America had to pick between cutting sustainability programs or dividends for investors, the thinking went sustainability programs would be the first to go. Then the COVID-19 pandemic arrived and something unusual happened. ESG didn't collapse. It accelerated. In particular, the emphasis on climate change became an even greater focus within companies and investors who piled into stocks of sustainable companies en masse, driving up the values of companies like Tesla. Hello, has Tesla been ever discussed in this show? And doubling the money invested in sustainability-oriented funds. This gave fuel to Mr. Fink's thesis, green investing is profitable. So basically the piece then goes on from there. It goes on from there, and now he sent out his latest letter, which basically tells, let me scroll on down here now, this one. This is the quote from the letter. Mr. Fink is now calling on all companies to disclose a plan for how their business model will be compatible with the net zero economy. And of course, we know of a range of companies who've already committed to doing that. Salesforce, Facebook, Johnson & Johnson, a wide variety of others. So this is the latest area in which he is now saying that this has to be done. The piece goes on then to talk about transparency and a range of other things. Now, the thing is though, if we went back a year and we had followed Mr. Fink, and if we had invested in some ESG type of ETFs, how would we be doing today, and where would we be looking to for tomorrow? So now let's pop over now. Let's pop over now to let me pop over here and I'm going to bring you to my watch list. Okay. So here's my watch list. I have, over here, I have 13 stocks for you. 2 of them, of course, are the SPY, the S&P 500, and the VectorVest composite. So I've already discussed those. So that's why I'm going to get straight in here. And what I'm going to do is I am going to go back to a year ago. Let me go back to a year ago. And I'm going to go back to when Mr. Fink wrote that letter, and let's see 3 ETFs that we might have looked at back then, and let's put his idea to the test. Let's just see. Oh, sorry, I'm gone back too far. Let's just see whether he would have been right. Did sustainability investing top the market? Okay, now let me stay focused here. Okay, January. Going to go back to. He wrote that letter on the 24th. Right. Let's go back to the 24th. And I'm going to highlight Invesco Solar. Okay, I'm going to highlight Invesco Solar. I'm going I'm going to highlight TAN. And this ESGU, and I have another one here, DSI. And that is everything. Yeah, they're the 3 ETFs that I picked out. I am going to not quick test all. Let me go back. I'm not going to quick test all. I'm going to quick test selected for the year, and let's see how we go. Well, look at this. Well, he was right. He was absolutely right. Is that the S&P 500 in that period of time delivered 15.62%. On the other hand, if you had these 3 ESG ETFs, your average would have been 91%. Now, I can also, of course, talk about the fact that you've had a change in administration in the US, and of course the US has now signed up to the Paris Accord. And therefore, I was on the Hot Stocks panel here last October with Steve Chappell and with Glenn. And we were talking about, particularly Glenn was very, very focused on green energy stocks at the time. That TAN, that ETF is specifically focused on green energy. That would have been up 236%. 236% in a year. Now, I would, apart from Tesla, okay, I get that. But apart from that, I would be interested to see how many of you can come up with a range of stocks that could have produced that type of return. Anyway, let's just say you didn't pick that, right? Even to come down here to DSI. Now, DSI is the KLD ETF, largest 400 stocks in terms of ESG. And even that one delivered 17.75%. That also outperformed the S&P. And then ESGU, which is quite a larger one. It's a much larger ETF. So DSI has been around longer and it's more general. ESGU is a bigger one. And that one was up 20% in that period of time. And then, as I said, the clean energy one just absolutely went crazy. It went absolutely crazy. So indeed, Mr. Fink was right. And ESG, I'm going to refer to it slightly a little bit more later on. So I don't want to labor the point now. But of course, the real question is, so what about now though? What about now? Like, do I look at this? Do I look at this now? Or do I look at it? Is this yesterday's story? Well, yesterday was a big day, so maybe not yesterday's story, but is this all over? Let's take a look. Let's take a look and see. Let me pop on back over here to today. Let's take a look at them. I'm going to look at 3 things on these. I'm going to look at, let me highlight them here now again. So here we've got DSI. I've got, let me see over here, ESGU, and where is TAN? Here it is. Okay. So far today, they're all up. Okay. No surprise there. Like everything, every single thing that I have today on my watch list is up. Every single thing. They're all up. And most of what I have are pretty big and heavy hitters. So that's why I'm saying when it comes to the S&P 500 versus the VectorVest composite, therefore, you could probably tell that was going to happen. But anyway, when we look at these, there's 3 things I want to take a look at. Number 1 is my second favorite indicator in the entire VectorVest system, and that is CI. My first favorite, by the way, before you ask me, my first one is VST. I think VST is a superb indicator that I really place a lot of faith in my own investing decisions. But my second one is CI. Comfort Index. I love the idea of the Comfort Index, which is a stock's ability to withstand severe and or lengthy price declines. Who does not want to withstand severe and or lengthy price declines? Okay, so over here, as you can see here, the CI right now is at 1.79, 1.3 and 1.25. They are very, very high CI levels, particularly TAN up there. I'm going to pop into the graph here now in a moment, but before I do, I want to show you one other thing, and that is that there are actually interesting dividend yields on these as well. Smaller one on the green energy one, pretty small at 0.08%. ESGU, a dividend yield of 1.24%, which is pretty substantial in the environment that we find ourselves in right now. And also DSI, that is at 1.2%. The dividend yield there is at 1.2% as well. Let's take a quick look at the graphs and let's just see how they're doing. So I'm going to take off the dividend yield because I've already discussed those. Sorry, I'm going to take it off here. DY, there we go. Okay, so as you can see here, and what I am going to put on is RT. Here we go. Let's take a look at how the market is feeling here. RT is pretty good, pretty solid. Really significant rise here from 42.17 here right at the bottom. Now trading at 72.75. Very significant rise, of course. But as you can see, the graph is simply moving from the bottom left up to the top right hand corner. That's a lovely CI stock. The momentum here, the relative timing is telling us that the buyers are certainly pushing the sellers. They're certainly giving them a run for their money. Now, ESGU, pretty similar story, basically. Pretty similar story, although these two would be rather similar anyway. They both have a broad ESG approach. So here you can see that we had down here at its lowest, down 49.98, currently trading at 87.95, and it hit its high on the 26th of January, which is 2 days ago. Again, RT looking very, very similar. Therefore, we can see buyers are certainly making their presence felt on that one. And then finally, TAN. Now, this one has had a much greater growth. RT is higher, of course, because it's had more of its activity. Has been falling over the last period of time. And if you really zone in here, you can see that where we've been at the market. The sellers have been starting to push it down. But as of today, literally as this is happening right now, we can see that the buyers are pushing it right back up again. Okay. Well, when I say right back up again, it's turned that tide of the very, very short term trend, and we can see that being reflected here in RT as well. So in all of those three, I think there's such a focus on this, and it's coming from everywhere. I read a book over Christmas actually. So I bring it in and I show you the future that we choose. That was the one that I read all about not just the environmental side of things, but actually when you look at the overall impact of everything when it comes to the impact on, let's say, clean energy, when it comes to financing models, when it comes to business models, intergenerational justice, when it comes to planning our architecture and infrastructure. And that was that book. It was really, really quite interesting. But I've had an interest in ESG now for quite some time, and I've been observing these stocks for some time too. One of them, I did bring up TAN, and I did bring up DSI at Hot Stocks panel sorry, not the Hot Stocks panel. I brought it up at the last time I was on Trending Thursdays, which is quite some time ago now. So it's been an interest of mine for a long time, and I'll touch again on it later on today. It's a very interesting topic in general. It's getting a lot of attention from a lot of people who have got a lot of influence. Okay, now let's then move on to our second topic. This is one that hasn't been discussed on the show before, actually, and let me pull this up for you now. Okay, I'm just going to make sure that I have what I need here. And that is, let's head back over here to this one. Okay, and that is AI, artificial intelligence. This is a topic that has not been discussed before. So I decided that I would just talk you through an area that I feel is very, very important. So first of all, I'm going to move out of the way. Okay, so I'm just going to slide over here as if I was doing a dance move on the dance floor. Okay, so if you think about technology and where it's important, let's just look from the bottom. Okay, so at the very minimum, right, we need to have a way in which to use technology, whether it's a device like a phone, a laptop, and we need to connect to the internet, right? There's a lot of companies doing that. You know, the market is pretty saturated, particularly in the US. When people need a new device, they're buying in, or they're moving between competitors, but there's not this huge growth capability. Second thing is we need to be cyber secure. We need to make sure that we have stability in our security. We absolutely need to make sure of that. We need to know that when I log on, let's say I'm going to log on to my internet banking, that it's going to be safe and it's going to be secure. And that is why we have things like, encryptions, and that is why we need to make sure that our Wi-Fi's are locked down, and a range of other things, right? Again, nothing new here. Integrated information needs. If you look at digital transformation, in the 1960s, digital transformation was getting this tool and this tool and this tool and this tool. Now we had word processing, then we had Excel, then we had all these various different things. But actually, particularly now in the last 15 years of digital transformation, you're bringing together integrated information needs. So now, rather than me, let's say I'm going to write a document and I'm going to email it to Joey, instead what I can do is I can do it on our Teams, and I can upload it as a file so that he can see it as I'm writing it in real time. So that's the next one. Competitive differentiation then is when technology allows us to be different. Now, I'm sure a lot of you know this show without YouTube would not have been possible in this current way. If you go back to the beginning of VectorVest, VectorVest started off as a physical printed thing that was sent out in the mail. Physical book. Then it moved into a CD-ROM. Then it became a product that you could access online. Then it became a real-time product. Then it became a product where you could customize everything. I have been here, like I say, for the past 10 years. I have been here to see an awful lot of technology changes here. I've seen a lot of that happen. And now, of course, through the competitive differentiation, now VectorVest runs its live streaming, like this show, like my own show, and a wide variety of other things to enable it to differentiate itself in the market. But look at the top. Look at the top. How can we think about technology changing things entirely about the way we work? Well, I've actually just given you a clue there, because I've already mentioned it, that Joey and I can interact on Teams. He can actually feed everything that he needs to feed across to me as I'm doing the show here in real time using Teams. Can I give you a statistic? There has been a 54% increase in the amount of people using Teams on a daily basis since COVID. That may not surprise you. That also, by the way, equates to 115 million daily active users of a technology that didn't exist a couple of years ago. And I was recently talking in preparation for the show. I had a chat with Microsoft, and I said to them, I said, tell me, what are you planning? What's next? Where are you going? Because this cloud, this cloud computing and this enablement of us to interact with each other, when we look at that, when we take a look at how we can innovate and how we can plan the way in which we work. What are you planning? So what they're planning in particular is, and it's already there, is that if Joy leaves me a voicemail, it automatically transcribes. That's called STT, speech to text. But what they're planning is to actually integrate that into your calendar as well. So Joy sends me a message saying, hey Susan, just want to check in with you about Trending Thursdays tomorrow. Can you send me something across, and also let's pop a meeting in the diary for 2 p.m. tomorrow. And then automatically the call to action is highlighted, that highlights what he wants me to do. And then the second thing is that I get a diary invite simply by his voice. That is what AI, that is paradigm shifting. And my question to you is, how do we find the stocks that are really focused on AI? And I'm not just asking, by the way, I'm not the one just asking this. Here is my second story. Let me just pop back there now. Here is my second story of, okay, let me just go the old-fashioned way. Let me just go the old-fashioned way of just showing you exactly right. And that is this guy up here, Mr. Mark Cuban. Cuban, yes. A guy, of course, that many of you will know personally. I'm very familiar with him. I'm a big fan of Shark Tank. And what he says is how good a company is at the AI is at the foundation. That is what he is talking about right now. So I thought what I might do is just tell you 3 ways that AI might be translating into stock prices, right? So number 1 is saving time, because if companies can bring AI into their companies and therefore improve the productivity of their staff, well then they need to pay out less money on systems and labor hours and so on. So as a result, then that money can fall to the profit line, pushing up the earnings per share and then naturally having an effect on the share price. Alternatively, another thing that it could do is simply make work easier so that then you can have a better outcome for customers. So for example, some accounting software now using AI, it will connect to a bank account, watch the transactions coming in, and the AI, the artificial intelligence, will actually read the transactions coming in and assign them into their various different areas, which will transform the idea of a bookkeeper and also an accountant. And then the third one, I had a chat last weekend, again, in preparation to talk to you today, with my friend in San Diego, who loves her Tesla. And she was telling me that the next update she's expecting from Tesla is a complete self-drive. Completely. Now I was over with Tracy in San Diego last November, 12 months. At that time, her Tesla could stop. So her Tesla knew when the lights turned red, but her Tesla did not know, it could not read a stop sign. That is, then a lot has changed since. So now it can read stop signs. That's machine learning. So that is when a company like Tesla makes sure that when one Tesla makes a mistake and learns, it goes out to all of the fleet. So therefore, all the cars teach each other about how to do things. Now it's at the stage where the next upgrade will be literally a full self-drive. That's all AI. That is really all AI. So let's pop back over here now to my back to my watch list, and let's take a look at 2 particular stocks that I think are let me just click off that now. 2 particular stocks that I want to show you. One is good old Microsoft. You know the adage, nobody ever got fired for buying from Microsoft. Microsoft and Nvidia. Couple of things that I wanted to show you here, but just before I do that, just again, Joy, I'm just going to check in here after I go through these stocks. You can let me know if there's anything there that I need to refer back to. There's lots and lots of chat happening, and please do keep it coming. Keep the chat going there. We want to make sure that you are that you're all talking to each other. Absolutely. I see there, VJ. Yeah, I agree with you. Cuban is a tech visionary. We should definitely listen to him. If he's basically making AI decisions on this, I think it's certainly one to watch, and that's why I talk about it. But as investors, where I'm really interested is right at the top of the right at the top of the pyramid. Okay, great. So Nvidia and Microsoft. Now let's scroll on over here and let's take a look at what we've got going on. Nvidia, I remember actually, I was telling you one quick story. I was sitting beside Dr. DeLito, our founder. I was sitting beside him at the Money Show in San Francisco back in 2017, I think it was. And he said to me at that stage, 2017, I was, quite some time ago. I think it was at that stage he said to me, of all the stocks that he was going to pick out that year, Nvidia was his top one. And I remember that as I was preparing for this. Nvidia is also looking at me right here because part of what's in this laptop right now has been made in Nvidia as well. Anyway, so look over here. When we look at both Nvidia and Microsoft, we can see that the relative value here is our long-term price appreciation potential is very, very significant. So above one is favorable, below one is unfavorable. Again, to those, to those. Sorry, thank you to Michael. The saying was, no one ever got fired for choosing IBM, but that was in the 80s. Yes, okay, you're right. Thank you for saying that. But I think that phrase has been, I've heard that phrase about a range of companies. And you're right, I shouldn't be saying it I shouldn't be saying that specifically about any company or those companies it could be referring to when that is the correct one. Thanks, Michael. Okay, so the long-term price appreciation potential here, which is RV, relative value, is above 1, and it's specifically well above 1 as well. So we've got some very good long-term price appreciation potential here in both of them. Now, if I wanted to check, let's say in the case of Microsoft, I'm just going to right click and I'm going to get a full stock analysis report here. The great thing about these stock analysis reports is it will actually give me in comparison to the average for the entire VectorVest system. Okay, so when I go down here to relative value, what I can see is Microsoft has a relative value here of 1.24, which is good on a scale of 0 to 2. Okay, the next one here is relative safety. Any of you, I would be interesting to hear how many of you use RS, particularly when, oh, thanks Joy. Joy just put a link in there for the free stock analysis report. Anybody that is not familiar with VectorVest, anybody that is new, click on that link and you can get 3 free stock analysis reports right away. Okay, then, so relative safety is where we look at the predictability and the consistency of financial performance. And specifically, that means the predictability and consistency of the dividends and the earnings. 2 good stocks from that point of view. Very, very good. Very, very strong relative safety here. And now I see one of you has already picked up on this. We can see here, Nvidia is, you know, its momentum isn't very strong at the moment. We can see that it's trading quite flat. But down here with Microsoft, it's up here at 1.22. Overall, very strong VST showing. Nvidia has a hold. Microsoft has a buy recommendation. But as Steve Chappell himself says, money goes where money grows. And it's always important to make sure when you're looking at a stock, its earnings. A, is it profitable? B, is it growing? And when you look over here at the earnings per share, is it profitable? Absolutely. But secondly, when you look at the growth capability here, we can see Nvidia is growing its earnings at 23% and Microsoft is at 16%. So they're two very strong areas. Personally, I'm interested in both of them because of the capability they have right up at the top of that pyramid, which is in the paradigm shift. Okay, now I'm going to move on now to our next story, which is all about ETFs. But before I do, what I just want to let you know is, I just mentioned there the Hot Stocks panel, and I also mentioned Steve Chappell, and I mentioned Glenn. Well, you have to mention Glenn, it's trending Thursdays. But what I do want to tell you is that the next Hot Stocks panel is actually taking place on the 3rd of February. So it's taking place on the 3rd of February, and it also, you will see it here on YouTube. Now, here is how to make sure you don't miss it. Number 1 is make sure to subscribe to the channel, but also click on the bell. Click on the bell, because what you need to do is when you click on the bell, then the bell will give you the notifications of when that goes live. So the first thing to do is subscribe to the channel. Doesn't cost you anything. Subscribe to the channel and click on the bell to make sure that you're notified of when that goes live. And second thing is put it in the diary for the 3rd of February. Joey, can I just check with you? What time is that going live? Is it the same as today? When I say can I check with you, as in if you just pop it into the chat there, you just might do that. And if there's a link there as well, Joy, that would be great, just so people can specifically put that into their diary. I have to say, I really enjoyed the time that I worked with the guys. 2 p.m. Eastern time. That's what I thought. Yep, that's great. I really enjoyed that time that I was there with them both. So you're going to meet Steve Chappell. Those of you who haven't met him before, he's superb. You're going to meet Glenn Tompkins, of course, and Jim Penna. You're going to meet the 3 of them. Okay, now let's move on then, and I'm going to talk about my 3rd story for today. I am going to bring it up here, and that is couple of nuances to this now. Another big area that I am really interested in and have been interested for years is ETFs, exchange traded funds. Now, I haven't been talking to you, I've spoke about ESG and referred to ETFs, but this time I'm going to talk about ETFs in their own right. First of all, to those of you who don't know what an ETF is, ETF stands for exchange traded fund. So it's a fund that trades on an exchange, but it typically is a passive instrument, which means that it will track an index. So when, at the beginning of the show, when we looked at, for example, we pull it up here again for you, when we looked at these here, I'll just scooch over here so that I'm not in the way. You know what? If only my husband had technology where he could just move me around as he needs me to, wouldn't it be great? Anyway, so up here, S&P, if I wanted to buy the S&P 500, of course, it is only a list, whereas I can find an exchange traded fund to track it. Similarly for the Nasdaq, similarly for the Dow Jones, and so on from there. Now, the key thing that I want to talk to you about though is ETFs start off in 1993, right? It actually started the year before, and at the very, very end of the 80s, but a lot of people think the very first one, it's not correct, but the first big one was the SPY, S&P 500. That began back then, 1993, but really ETFs seriously took off in 2008. And they took off because diversification, because they're low cost. And the minute a lot more money starts coming into ETFs, then of course the providers then need to think a little bit more creatively about how they can offer new products to their customers. So the proliferation of ETFs has been amazing. And I was thinking about this naturally to getting ready to talk to you. And I was thinking about what's new that I could tell you about exchange traded funds. So I'm going to tell you something new, and I'm going to tell you something that an ETF does that isn't new, but is pretty tough to find, right? So that's the deal that I'm going to make with you. Okay, so first of all, I'm going to bring you back to my story. Okay, going to bring you back here to my story over here. And so that is, first of all, again, I'm just going to scooch back over here. So I'm going to give you a chance to read what you need. So by many accounts, 2020 will go down as a year to forget. Those actively monitoring and participating in the exchange funds industry may beg to differ because records galore were once again shattered. As I say, the amount of people, not just the amount of people, the amount of money and the amount of proliferation that has happened in this area is really quite significant. So overall assets gathering, the figure was about 510 billion in mid-December, and that was just that was gathering. Now that was just what happened in 2020. So the amount of money that is in ETFs globally now is in the trillions. And in fact, last year was the first year that assets under management in European ETFs alone crossed the 1 trillion mark. So it's really it's a big deal. But I'm just going to briefly touch back on this. A couple of trends here. I'm not going to mention two of them in great detail. I am going to mention one. So one of the ones I'm not going to go into great detail on is a lot more money going into bonds through ETFs. And the second theme is the one that we've already discussed down here, which is ESG exuberance. Two figures I wanted to tell you is the amount of money that went into US ESG ETFs last year actually made the sector double. It was $27.4 billion went into ESG ETFs in the US last year, and it was 22 billion euro. Now, that Europe has typically been leading the way when it comes to ESG ETFs, but the US is certainly catching up. So just wanted to mention those figures. But where I want to delve into is themes. Is, as I mentioned, if there's going to be a lot of money coming into this particular area, well then the fund managers have to come up with different ideas for you. And there's one that I spotted, one theme that I spotted, which is it's the ETF isn't new, but the volume has changed immensely over the past year. So I think what's really going on here is that people are now discussing this particular idea in a bit more detail. So I wanted to bring it to your attention. So where I came across this actually was on this particular story. So Kate Stalter from Forbes came across, she wrote about three particular themes, and one of them is this. Let me scroll on down. It's all around the emerging markets there, down here. Isn't this an interesting idea? Is that companies within their first several years of going public tend to outperform the broader market. So this fund tracks the Renaissance International IPO Index. Specifically, the index reflects approximately the top 80% of newly public companies in capitalization terms, and the index imposes a 10% cap on the weight of large components. So basically, larger companies are added quickly and smaller ones during quarterly reviews. Companies with a 2-year history trading on the public markets are then removed. So basically, this gives you access, diverse access, low-cost access, tradable access into companies that have just IPO'd that are trading within the first 2 years. So I thought I'd check it out. I thought I'd check it out over here in VectorVest. So the ticker code is IPOS. Okay. So let's pop over there and I'm just going to show you it now. I'm going to close my stock analysis report. And I'm going to go back over here and here it is, IPOS. There it is. So here we are, right? Very strong CI, very strong comfort index. Reasonably good VST, but of course this means less when we're talking about an ETF, because RV and RS don't make it an awful lot of impact here. So let's just take a look at the graph, and here's why I wanted to show this to you. Let's just take a look at this, right? Now I might just have to move myself around. Yeah, I'm going to move myself around here so that you can see precisely what I want you to see. Okay. Look what happens with volume. Is that the volume, if I extend my graph, right? Let me just extend my graph out here. I'm going to go way out. So the graph here is 3 years, right? I'm going to go way out, 4 years here. You can see that, I don't know if you can see it here, but there's very, very little to see. It's very, very little to see. There's very, very little volume, here until March, April of 2020. Then, naturally enough, just like the rest of the world, you can see here that the price fell. But look what's happened since. Is that look at the volume here has dramatically changed. Now people are really paying attention to the ETF. And of course, if people are paying attention to something and it's making them money, it's our job here to show you. Let me go back over here now to a year. So now I'm going to scroll back in here. So the stock price there on one side of my head, that side of my head, the stock price there had a low of 1914. That was back in 19th of March. And now it's trading at 38.23. Similar sort of pattern to some of the other stocks that I was showing you. Just had a recent high. But what's interesting here, RT is at 1.18, and it's just one. It also has a small dividend yield of 0.42. But it's an interesting concept that is gaining a lot of attention. That's why I wanted to bring it to you from a story point of view, but it's an interesting sort of a theme of an ETF that's been there for quite some time, but the volume has dramatically changed, the price has picked up, and it's a theme that I certainly will be watching. A lot of people try to chase IPOs. Personally, I'm not one that's done that. I haven't chased Twitter, and I bought and sold Twitter. I didn't chase Snapchat, I didn't chase Facebook, I didn't chase any of the rest of them. I'm not an IPO chaser, but through an ETF might be a different story. It's an interesting way to gain access to something like IPOs, where it can be very, very, very tricky, and of course massive volatility, questionable liquidity sometimes, and all that comes with it. This is the first theme that I wanted to show you. But the second one is I wanted to show you something that a lot of investors find elusive at the moment. Okay, so this is the thematics that I had picked out for my story. Within ETFs, as I mentioned, we've had a record year. I've spoken about themes, and I just want to talk to you about dividend yielding ETFs, because this is why dividends matter. I discussed this theme in one of the Fantastic Female Friday show. Actually, Joey, would you mind just getting the link for the Dividends Fantastic Female Fridays episode and just pop it into the chat there, please? So for anybody that wants to delve into dividends in a lot more detail, I explain why and why it's worthwhile. Certainly, I'm somebody that has often focused on dividends, or at least picking dividends within the stocks that would go into my portfolio. But the key thing I just want to pick out of this to show you is that the biggest way to position dividends to make the biggest difference in your portfolio is if the dividend if the company has a dividend and it's growing it. So for 30 seconds, I'm just going to roll back here a little bit, just for 30 seconds. First thing is, a dividend is a payment made by a company to a shareholder. It is not required. It is a complete choice on the part of the company. In contrast to bonds, if a company decides to not pay a dividend, that's not default, That's just their decision. So a company will pay some of their earnings, if they choose, out to dividends. The reason they might do that is, number one, they may not have a lot of reinvestment opportunities. So therefore, rather than holding on to their profits, they can give them to shareholders. And number two, that sounds pretty good to a shareholder. So it attracts a new type of investor. Maybe they're income focused. Maybe they are a pension fund. Maybe they're a more conservative investor, whatever it might be. And we've loads and loads and loads of searches in Unisearch where you can find searches that rely on that. So that's the first thing. A company doesn't. Thank you. That episode, Joey has just posted it there now in the chat. For anybody that wants to delve much deeper into dividends, that episode is up there now. Anyway, the reason that I wanted to mention this is that I thought this was interesting. Between 1972 and 2010, I got this from a paper. The S&P 500 index over here delivered 7.3% total return. Total return means both in the capital gain as well as dividends, right? In both of them, total return. Now, in contrast to that, when you look at all dividend paying stocks, the total return of that was, in comparison, was 8.8%, right? So, a substantial difference. And bear in mind, this is on an annualized basis. But the one that was top of the pops are the dividend growers and initiators. The dividend growers and initiators. Now, we have a beautiful metric for looking at this in VectorVest. And I'm going to pop over and I'm going to show you that briefly. And then I'm going to show you an ETF that just does all this for you anyway. Okay, let's pop back over to the system then. Let me do this right now. Here we go. Just going to close down this graph and pop over here. Right now, I am now going to scroll over. I'm just going to take Microsoft here just for a moment, just to show you this number. So if I scroll over and stop here. Here we have all of the dividend related information. DIV is the actual dividend itself. The DY is the dividend yield. So this is the amount that the dividend pays out as a percentage of the share price. DS is dividend safety. You can find all of the information about this in the stock analysis report. And then over here we have DG, which is dividend growth. Dividend growth. So you can actually find all of the stocks that are paying a dividend and growing it right here. Now, maybe you want to get it all together. Maybe you want yield, safety, and growth. Well, as I say, it's beautiful. There it is, YSG. Yield, safety, and growth. It'll put all of those together for you. So that is how you can make sure that if you're looking for stocks that do pay a dividend, that they have yield and safety, but also that they're growing, because that can make a very, very, very big difference in a portfolio. But for you, especially for you, what I wanted to do was I wanted to pop on over here and I wanted to show you, I wanted to find an ETF that did this for you specifically. Okay, so let's just pop over here now and get this. Okay, and how I did that was I went to Unisearch. Okay, I went to Unisearch and here is a search that I built. Now I'm going to show you how I built it, but I just wanted you to see it. So I just wanted you to see it front and center here. First thing I did was I looked for a specifically, I went looking at stocks and I looked for the industry group. I went industries, filter by, and I specifically searched for an industry group. And in here, then I also pressed equals, and then I wanted selected industries. And the selected industry that I was looking for, let me scroll on down here, was ETFs that were specialist focusing on dividend. That's simples. That's all I had to do, was simply look for it. Simples, simples, simples. All I had to do was find an industry group looking for the speciality ETFs, which are dividends. Okay. Now, then when I did that, actually, you know what? Let me show you what happened when I did that, because it took me a little bit of time then to figure out how I could really get what I wanted, right? So I did that first of all, ran the search, found loads, no problem, found loads and loads and loads, lots of dividend ETFs in here. But the thing is that why would I want a dividend ETF? So that it pays me a dividend. So the next thing I wanted was that I wanted my DY, my dividend yield, DY, I wanted my dividend yield to be greater than 4%. Okay, and I wanted my dividend yield to be greater than 4%. So yes, I want a dividend focused ETF. So an ETF that buy stocks specifically with high dividends, but they give them to me. Like that's what I'm looking for. So I went and I ran the search again. And then what did I find? Well, found loads of stocks here, all right. The thing is, though, is that I wanted to know, were these rising? Were they falling? Some of them had very, 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 very muted activity. Some very, very muted activity. So what I did then, the next thing I did was then I looked for my CI, I looked for my comfort index, and then I just looked for CI. And I tried a range of these. And I tried first of all going very high. I tried even finding a CI of 1. And when I ran the search, I actually couldn't find any. So I actually dropped it down to 0.5. And look what happened. 0.5. Dropped it down to 0.5. Like, as a woman, you've got standards, don't you? Down here, CI, and I found one. Just the one. It was the Jpmorgan Etf. And that's the one that I have over here in my watch list. It's the Jpmorgan Dividend Etf. Is the only one that I could find which is a dividend yielding ETF, has a dividend yield of greater than 4%, and as you can see over here has this lovely RT, and it also has a decent CI. And just to show you over here, the dividend yield of that is, let me scroll on over, the dividend yield over here is 4.4%. So the reason that I wanted to pick this one is, if you were to try to find a stock that is, reliably, sustainably delivering 4.4%, it's actually pretty tough. And there's a range of really high performing, high yielding dividends, but the capital gain isn't really there. The potential isn't there. That's why I went looking for it. I wanted a high focused, dividend focused ETF with a high dividend yield, but I also wanted a good strength behind it. And that was the one that I found. And here is the graph. So as you can see here, the low was back here of 17 back in March, up now to 27, very, very sizable, 4.4%. This is not going to be the most exciting stock for a trader or for anybody who's in it for short term, but this would be a very interesting possibility for anybody that is focusing on dividends or wants to make sure that they have an income generating within their portfolio. Also, I'm going to talk about options, not my next theme, my one after that. So I'm going to show you about generating income there as well. Before I move on to that, let me tell you about the trial. Any of you that are new to VectorVest, the watch list that I've set up, the searches that I'm doing, the graphs that I'm looking at, the education that you can get from being part of the VectorVest community, all available to you, and just for 99 cents for a trial. So let me see. Oh, thanking you there, VectorVest. I see there you have. Brilliant. Yep, you've put the link in there. Really appreciate that. Maria says 99 cents worth. Offer more than worth it. A great opportunity with real time. Yes, thank you, Maria. Thank you for mentioning that. My feed is real time. You can see here the last tick is 15:08, which is, of course, we are Trending Thursdays is live. So that is, this is also for a real time trial. And also then there are various different tiers that you can get, but of access. So you can get an end of day, you can get 15 minutes delayed. What you're looking at here is real time. And also there is a lot of education that comes with it. Trending Thursdays and my own show, Fantastic Female Fridays, they're free. They're beamed out here live on YouTube every week. Trending Thursdays is every week with the fantastic Glenn. So they're, of course, available to everybody. But for those of you who do go on to take a trial of the software, naturally enough, there is lots more. Okay, great. Fantastic. Right. So let's move on then to my fourth story of the day, fourth of fifth. Joey, can I just check in with you? Am I doing okay here time wise? You might just let me know there. That'd be great. That would be super. Just while I'm getting the next story ready, I would appreciate that. Okay, that is not the next story. Yep. Joey, you're a man not only of few words but of few syllables along with it. Now, sorry, that is, I still haven't got the right one. Okay, now next one, this e-commerce, another area that I have a huge interest in, and the reason I have a huge interest in, partly because of my interest in technology, partly because of that, but I'm also interested simply in retail from the point of view of how we understand and how we interact with various different providers who are trying to change in so many ways. They're changing with consumer tastes and trends. They're changing with technology. They've had a phenomenally up and down of a roller coaster of a year when they've been locking up and closing down and all those sorts of things. And e-commerce is something that can democratize retail to a large degree because I can sell anything from anywhere, theoretically. And on the other hand, there is huge companies who are taking over a lot of that retail space, both physically and online. And then, of course, there's also the collaboration that happens where some of those really big companies like Amazon and another one that I'm going to mention are enabling companies to set up their own stall on their platform so that they can take their distribution and put new companies and new products in front of those customers as well. So I was particularly interested in this particular piece, 3 emerging e-commerce growth trends to leverage in 2020, right? So this was written back in August. And the reason that I wanted to talk to you about it today is I think that there is a much greater sense of where we're going now with e-commerce based on a couple of things that have happened. But there's one area in particular that I want to show you arising from what I saw at the end of last year that brings these two together, okay? So let's scroll on down here. Traditional retail sales have declined, but e-commerce has seen 129% year-over-year growth in the US, and Canadian orders as of April 21st with an impressive 146% growth. The question people had then was, could it be sustained? Could it be sustained? And that's where I want to answer it, but I also want to answer it by looking into the future as well. All right, so scroll on down, and personalized commerce is the next frontier. Wonder what you need for personalized commerce? Oh, that's right. AI. You need artificial intelligence. Have any of you ever bought anything from Amazon and then it says, well, if you like this, then you like these 4 other things and one of them is on a special offer? Do you think there's some person behind the show doing that? Of course not. That is AI. That's artificial intelligence. We've already dealt with that though. Now, the second thing down here I think is interesting, which is social commerce through celebrity endorsements. Influencers. They are making more and more of a difference. But we kind of knew that already. What I'm more interested in is what's social commerce. So social commerce is a relatively new thing, which is when I'm looking at an influencer, let's say on Instagram, owned by Facebook, from a stock point of view, and I decide, oh, I like what that person is wearing, I like what that person is eating, I like what that person is promoting, I can swipe and I can buy from them. That is social commerce. And that is where media companies, on one hand, are now becoming directors towards retail space. This is a way in which influencers are commercializing what they do as well. So when you put that together, that's a really, I think, it's a really interesting trend to look at. And we can only see the role of influencers and the proliferation of influencers right across social media growing. Do I have to go back to Reddit? Do I have to go back and point out that's exactly what's going on with Reddit? Not the whole swipe up to buy thing. Not there on the platform. People are going to another one to buy. But the point is that the voice, the actual leverage of influencers is strengthening, and it's available to anybody at any stage as long as they can get a voice, which of course the barrier to entry there is very low. And of course the platforms are also now thinking, how do we commercialize this? Secondly as well, and here's particularly why I wanted to bring in, I'm going to be talking about Amazon, the stock here, as I scroll on down, is also the other thing, the other area within this. The other area within this is voice activated commerce as well, which is where you're saying, hey Google, what is the latest price of? Or hey Google, order me a pizza, or Alexa, etc. So actually voice related commerce is very different from an SEO point of view. Search engine optimization requires me to search in an engine. And obviously the other website on the other side can be optimized to see what I'm typing. But I might speak differently to Alexa or to Google Home, etc. And so for all of those reasons, I think that we need to look at commerce differently. It's not just about where people are buying. It is last year's story to say, well, people just look online to see what other people are doing and reviews and, product comparison websites. That is last year's story. That is the year before story. Today's story is the rise of social commerce, of voice activated commerce, but one more thing as well. And this is what I was watching very, very closely at Christmas. One of the episodes of Fantastic Female Fridays was we put the spotlight on the commerce on the retail sector. Again, I'm just going to slide to the left. Okay, just gonna come over here for a second. I'm gonna look up here. At that tweet just to make sure that you can see me do it. Look here at the data from Black Friday and Cyber Monday. This was a tweet that I put out. I tweet VectorVest quite a bit. And also engage with us on Twitter, by the way. We love talking to you on Twitter. Can you imagine what the Twitter handle is? At VectorVest. There you go. So I was particularly focusing on the consumer spent $9 billion on the web the day crisscross. Sorry. Joey just knows the song here that I was actually singing in my head. Was slide to the left. Slide. Yeah. Everybody clap your hands now, Joey. Yeah. So consumers spent $9 billion on the web the day after Thanksgiving, which was up 21.6% year over year. Year over year in the US, quoted by CNBC, for every $100 that Americans spent on Black Friday online in Thanksgiving 2019, they spent $122 or $121.60 to be specific about it a year later. That just shows you a big difference. Okay, Joey is now clapping his hands here with emojis. I can keep going with this, Joey, by the way. Now, Cyber Monday, of course, was the Monday afterwards. Cyber Monday 2020 was expected to become the biggest digital sales day in US history. So basically, e-commerce is here. I really do think it's here to stay. It's become habitual. It's habitual. What I mean by that is people have now, it's just become habit. Couple of statistics for you, just for closer to my side of the world. In Germany, and I'm from Ireland, but in Germany, 1 in 3 people over 60 shop online, and for those who are shopping online, they do so 4 times a week. So that's what I mean by it becomes habitual. It becomes something that people do, and of course, habits stick. However, there is one key trend that became very, very clear in the last year that people spoke a lot about at Christmas. People are forgetting about it now, but I'm not. And this is one to watch. And that is, what does the future hold? Well, of course, as you can see there, that side of my head is increased online shopping. Okay, yeah, we know about that one now. We've discussed that one. But also, the next 3 here is a focus on healthy and sustainable, kind of tying into the ESG theme again, but also tying into people wanting to live healthier lifestyles and a variety of healthcare related trends that we could talk about as well. Price sensitivity. People want to watch their money, and they're right to. People want to make sure that they are getting value for money. That's certainly a good reason as well. But also, and the third one here is, or the fourth one really, is the increased importance of purpose. And here's where Amazon has had to deal with a lot of flack. People want to support local. They want to support artisan. They want to support sustainable. They want to support the mom and pop, but with the convenience of Amazon. And who does that really well together? Etsy. That is who I am going to profile for you. Etsy does that really well. Etsy gives me that lovely, and look at it, it is the top stock here on my list. Top stock in terms of VST. Etsy gives that lovely combination of artisan, purpose, mom and pop, the person behind the product, sustainable. And that is, when I went and I looked at it before, and I'm looking at it again today, look here. RV 1.48, beautiful number, lovely long-term price appreciation potential. Relative safety is strong. It's strong. It's above 1. It's favorable, but it's also quite strong. And look at this. Buyers are buying this right up. Look at the share price today is up 6.16%. And then, as you can see here, we have our VST is at 1.42. Gorgeous looking CI. Long-term price appreciation potential, consistency and predictability of financial performance, direction, magnitude and dynamics of that direction, all moving in the right direction. And it has an ability to withstand severe and or lengthy price declines. Now, it doesn't give a dividend. We won't fall out with it over that. It doesn't give a dividend, but a lot of other things there. And it just weaves all of those lovely trends together. Now, Amazon down here. Well, first of all, look here at the price. Price is $3,200. VectorVest gives it a value of $1,734. Now, that's not to say the stock still can't rise. In fact, it's doing it today, of course. But that is based on earnings and the growth of the earnings, interest rates, and inflation. So, you know, a little bit overvalued there. Well, significantly overvalued there. Whereas up here we see more of a fair value. RV isn't as high. RS is higher. And of course, Amazon is a profit-making machine. And remember, it's also got that AI element Mark Cuban would be happy with. And also the RT of ETSI there is significantly higher. CI isn't as high. Both of them have a buy recommendation. And also, Amazon doesn't believe in paying out money to shareholders either. Interesting there, I see a little bit of the chat going on over there around Amazon. But I certainly, I have to say, from an ETSI point of view, I think it's a very interesting proposition that just sits in the middle of all of those trends. It's got the scale, it's got the distribution, but it's got also the artisan, it's got the, you know, loveliness sort of factor in there as well. So another one that I think is interesting to watch. So I am now also just going to, before I move on to the last one, before I move on to the last trend, and I do promise that I will be timely and that I will make sure that we take care of everything, I am just going to check in here and just make sure that I have everything covered. So I'm just going to check in with Joy, see if there's any question. And I think there has been, Joy, so I'll just pull that up here. Okay, yeah, couple of things there going on. Okay, before I get to that, can I ask you, please, if you're enjoying today, will you please press the like button? I see 98 of you already have. Thank you. I'd love to be able to go back to Glenn and say that I took care of you. He has entrusted me, and Joy has entrusted me with you, his prized audience. Will you please give me a like button and that let's just be able to communicate that I have taken care of you, because you mean an awful lot to him, and believe me, he wouldn't ask just anybody to do it. So I need to be able to go back and say, yes, I took care of your children for you. So if you could, that I would really appreciate that. Oh, thank you. I can see the likes are going way up there. Like I say, for anybody that wants to make sure, and get next week's Trending Thursday when he'll be back, the Hot Stocks panel, or for any other of the shows, just make sure that you've clicked subscribe and that you've clicked the bell. Okay, just wanted to remind you about that. My own show, Fantastic Female Fridays, is on tomorrow. Now, I cover a wide variety of things on my show, but in particular, I want to tell you what tomorrow's is about. Tomorrow is about teaching your teenager to take their first trade. How many T's are in that? Oh my God. Teaching your teenager to take their first trade. Do you know what? I had Glenn on my show one time, and we had the discussion how to talk to your kids about money. And somebody reached out to me afterwards, and somebody who I think an awful lot of. Hello, Lara, if you're watching. And she said, I love the conversation that you and Glenn had around communicating around money and how the stock market works and everything. But when it comes to taking their first steps, I'd love a granular step-by-step guide, and that's going to be on the show tomorrow. Okay, that is precisely what's going to be on the show tomorrow. So if it would be okay, Joy, could I ask you to please put the link in? Anybody that has subscribed and pressed the bell, you'll know about it anyway, but just in case. By the way, thanks so much indeed to your lovely comments. Hello, Paul. Great indeed to see you from Belfast. Thanks a million, Rose. Thanks, Brian. Thanks, George. Thank you. Thank you all very much. And thanks a million for those likes as well. As I say, he trusts me, and I'm feeling the pressure. Can you feel my shoulders here? Yeah. Burden. Okay. Burden in a lovely way, though. Burden in a lovely way. I'm just making sure that I take care of you in the way that he would want me to. Okay. Now, I'm going to go on to my last story here. I have promised that I will be finished by 1:30. We're not going to get to the stock viewer today. Joey has just told me. So I'm just going to take you through my last story. But 2 questions. Heidi wants to know how important is NAV for ETFs. For ETFs, Heidi, the NAV needs to be equal to the price because it's tracking a passive index. It basically absolutely should not be out of sync. There shouldn't be a premium or a discount. Now, the other thing is that some ETFs are very small. They don't have an awful lot of money in them. And then the question would be over whether they can be sustainable. The 3 biggest providers in the world are State Street, iShares and Vanguard. So if you choose any one of those 3, generally they're going to have the weight of the money behind them. They would have around about 75% of the market share anyway. Now, Maria also asked a question. Maria says, is there such a thing as a 0.00% expense ratio? Not that I've come across. That's not to say there isn't, Maria, but the lowest cost that I have seen on an ETF has been like, 3 cents per $100 invested, and I typically would see that in a Vanguard ETF as opposed to the other providers. Okay, great. Okay, love your idea, Sandy. Would love to talk to you about that actually. Something that I'm passionate about doing, and I try to do it here in Ireland. Right, I have 6 minutes to talk to you about the future of travel. Let's do it. So this is my last story of today, which is, can travel stocks recover in 2021? Now, I don't know about you, but I fully intend going on my holidays, going on holidays again. I fully intend to do that. No doubt about it. I don't think that's going to change. I think people will always want to travel. I do think wherever, right? Maybe that's a staycation. And of course, based on where you're all tuning in from there, it's absolutely, there's many places that you are where it's absolutely gorgeous parts of the world. But all the same, I still think people will want to travel for leisure. Business travel, though, I think is going to be very different. I think it's going to be extremely different. Joy and I can interact on Teams. Joy and I talk regularly when it comes to presenting either, let's say, a show like this, or whether it is my own show tomorrow. We can do this. I don't need to be in North Carolina. In terms of building relationships and so on, we've had to really, be able to dig deep and to develop those through a variety of other ways, right? However, as I say, I think travel, the leisure side of travel certainly can last the pace. So I found this story interesting. It basically said, right, it looks at the hotel groups, and a lot of those have recovered, but there's 3 stocks that have languished, okay? And they're all in the one sector. Can anybody guess what it is? Exactly, cruising. I have been on cruises. I think they're fabulous experiences, phenomenal business models. Oh my good God, phenomenal business models, and they're a great way of bringing you in, giving you a great experience, and leaving you feeling happy clappy, but also being able to offer you countless opportunities to spend money as well. Countless. So I took a look at these, right? So I looked at Royal Caribbean, and I looked at Norwegian, and I looked at Carnival, and I'm going to just pick Royal Caribbean and Carnival for you. Now, I've spoken to you about this before on this show. Now I'm just gonna move here for a second. I'm not going to get out of the way for too long, but okay. So here's Carnival. Okay, here's Carnival up here. Here's Royal Caribbean. Now, both of them are well up today, and they were well up yesterday. I've taken a position in both of them in the past. Both of them I've done through options, and that is what I want to particularly talk to you about. Is when it comes to stocks where, excuse the pun, although it's kind of intended. It is kind of intended. When you have stocks that may just tread water and that are going to be volatile in doing so, potentially selling a put option or putting a put spread on could be the way to go. I put on a put on Carnival back in October, and that was the one. Sorry, on Royal Caribbean back in October. I put one on Carnival back in April, and the juiciness of those premiums was really offered very high risk adjusted returns. Of course, they are under massive pressure. They have been downgraded from their debt point of view, almost down to junk status. So that's why I'm saying it's not particularly, like, they're at the bottom of my list here from a point of a VST. I would not necessarily be looking at these from the point of view of a long-term fundamentals. There's serious risk in both of them. However, they offer great premiums. And like, you can see the volatility in the share price. That could be down as much tomorrow. But if you are selling out of the money puts, and even better, out of the money put spreads, the lower leg though could be expensive based on the volatility. There are some really interesting opportunities in there that I certainly have found. Like VST, both of them are below 1. They're both on holds. CI, absolutely not at all. Dividends, forget about it. Their earnings are falling. I get all of that. But when you are looking at the juicy premiums that you can get from simply being in a position to take on significantly out of the money price, then you can really find some interesting opportunities. I've been pursuing them, and I think they're very interesting. And both of these, of course, are cruising, which is the leisure side of things. They would also be the biggest so Carnival is the biggest cruise company in the world. Royal Caribbean is the second biggest company in the world, with, of course, the greatest burden in order to be maintained as well. So I don't have time to do it for you now, but what I'll do here is I'll go into my options analyzer. I'll click on short put here, or I can also do a bull put spread, and I can investigate my opportunities in there, which is what I have been doing. So at exactly, we are just about to come up exactly to, just about to come up here to 1:30. I just want to thank you so much indeed for sticking with me. Really delighted to spend this Thursday afternoon with you. I also just want to say hello. Want to say hello to everybody who's tuning in from all over. I know that there's a GCM group who is here as well, as I was speaking with them earlier on, and they're all here. I want to thank everybody for sticking with me. Thank you for your likes. Thank you for your comments. Thank you for your chats. Thank you, of course, for being part of the VectorVest community. If you would like to, please do check out the free stock analysis. If you haven't done anything with us before at VectorVest, that's the place to start. The trial for 99 cents is a great opportunity to get as much out of it as you can, and you can do everything and more that I've been talking about. But I truly wanted to say a huge thank you to Joy and a huge thank you to Glenn for giving me the opportunity of spending the afternoon with you. It has been my absolute pleasure. I picked 5 themes that are very close to my heart, and they're close to the markets as well. There's lots of opportunity in what we're talking about, but it's been my pleasure to be here. Thank you for sharing it with me, and goodbye.